networking, automotive, and so forth.
Hi everyone, I'm Raanan Lerner. I'm a corporate partner at Meitar. Meitar is the largest law firm in Israel. I've been doing it for more than 25 years, working closely with many ventures and investors.
Hi, Ori Keren. I'm the CIO and partner at more provident funds and pension funds. We run close to 100 billion shekels of investments, and part of it is in tech, VCs, direct investments from all stages. If the guy who wants English has left, please let us know.
Or if you know Hebrew by now, it's okay as well. Not okay, so we stay with English. Ori, you invest, right, not only in tech, but in other sectors. So interested to have your bird's eye view on the tech sector in this macro environment. I mean, tariffs, inflation, credit ratings downgrades, trade wars, wars in general. I mean, all these annoying party crashers that we have to deal with and affecting the tech sector. Can you give us your overview on how you see that and how it affects the current tech sector?
Okay, so the way I see it, managing investments, especially long-term investments, is always managing investment in a world of uncertainties and trying to optimize the risk-return parity in different conditions. I think that since the COVID, the environment became much more volatile than before, and especially and the tech industry is suffering from it, benefiting from it, and suffering from it rapidly. It started post-COVID, which tech enjoyed a big boost, and then inflation and the rates, the interest rates that went up. And then in Israel, everything that we suffered since 2023 with the war and previous to the war, and then the never-ending war. So I think that the environment is tough, but I think that what we see, especially in Israel, and especially this year, from, let's say, from last quarter, last year to this year, we see an improvement in the Israeli ecosystem. We see much more focus, much more players, especially in the early stages. We have to put aside the outliers or the mega rounds of certain companies which make the average looks okay, although the median is not in such a good shape. But I think that the ecosystem here is better. I think that it showed the strength, especially with all the headwinds that we suffered in the last few quarters, or at least the last 2 to 3 years. I think that the demand is still far away from what it used to be, and it's driven mainly by foreign investors. I think that the local investors in the tech ecosystem is not muted, but the volume is much lower. So you can see it as something to hope for, and maybe it will get better, and then it will pick up much better than today. But all in all, I think if we have to put a bottom line, the tech ecosystem in Israel is better, especially in the early stages. The late stage is still with a funding problem and with a less interest than before. But we're keeping, trying to be optimistic.
Thank you for that. Boaz, Raanan, you have your own vantage point when we're shifting now to discuss megatrends. I mean, you have your view, and we've heard a lot. AI, defense, quantum, of course. So I don't want to repeat the already said and discussed, but how do you separate substance from noise? How do you know now in AI, when I know everything is investable or not, what do you see there? How do you cut through that and decide what's of interest or not?
Yeah, so I think, if we talk about AI, cyber, quantum, pretty much covered all the buzzwords from the past 2 days. So I'll let you know how we look at that at Qualcomm Ventures in general, both as a tech provider and also as a tech fund. So let's start with AI. If you look today at AI, try to see where the money is. So the first layer is the semiconductors industry there. So last year it was about $160 billion. About 115 were NVIDIA, so it's mainly training. All the rest go to companies like AMD, Qualcomm, and others. So that's one piece. How to compete there, obviously big players, but the price is big, so that's one thing. Then you go up, that's the data center equipment. That was about $115 billion, so except GPUs and so forth, so cooling, servers, and so forth. Again, hard for startups to compete there, but there are opportunities, and we see that both in Israel and Europe, and obviously US. Cloud providers in AI, about $25 billion. Again, nothing to do for startups, but that's something to bear in mind. And then the last piece, which is more interesting, is $10 billion of LLM applications agents. This is where all the buzz is about today, but if you look at the numbers, it's only $10 billion. It seems high, but compared to the numbers I showed before, not that much. This is where I think Israel has the best opportunity today. And again, if I try to be more specific, I think in LLM, pretty much we are, it seems to be like a race we kind of lost to Anthropic and OpenAI and others. They're making the lion's share of the money today. There's a section of what they call MLOps, so company like weight and biases and so forth, which were pretty good success, still have a room there. And then coming back again to the Israeli ecosystem, so all the apps that actually can take AI and make money out of it. Think about companies like, not Israeli, but the one that shows success, like Cursor, that moved from $0 to $200 million ARR within 2 years, or Harvey in legal tech, which reached $50 million. These kind of companies are definitely the one I can also see here. We invested in few. I think we can definitely have a good chance there. So that's on the AI space. There are some other sectors that enjoy AI. One of them is supply chain visibility. Basically how you track things like prevention loss, efficiency, things that was a bit hard to do before you had the right hardware and the software stack, which includes AI. That's another piece that we think is highly interesting. We have portfolio companies like Williot or Verity that play in this playground. And then the last one is robotics. So again, that was a big buzz a few years ago. If you think about robotics, the main theme of the industry was how to take the very established industry from that used to be in automotive and other places and move it to across other industries. It requires much cheaper hardware. It requires much more established software. Again, we've talked a lot today about what's happening with virtual language models or physical language models, which basically going to serve this purpose. That's going, I think, to make the change in robotics. Again, it's going to take time. It's going to require blood, sweat, and tears, but eventually it's going to be there.
Raanan, you work with a significant number of clients and from the very early stages. What do you see there that we haven't seen yet in the statistics?
Okay. Oh, it works. So a couple of observations, and I want to be optimistic with everything that Israel is going through. The high tech is alive and kicking, and a couple of things that we see, right? One, there's relatively more money flowing into the industry, which is absolutely critical. Alon Gamzo was here earlier, told us about the story of his company, a bootstrap, and he's made an amazing achievement. But ultimately, most of the companies would need a lot of money, so money coming into Israel is great. You see US investors, foreign investors investing in Israel, and actually some of them doing it relatively earlier, which is very good. Of course, that has an effect on valuation. More money flows in, valuation becomes higher. Specifically, you see that in repeating founders. So one of the things that we see in multiple transactions is investors willing to pay a substantial premium on founders that have previously succeeded. By the way, between us, I mean, even founders that have previously failed have probably learned something from it, so there's also advantage in failing. But there are a couple of seed or pre-seed investments in very early stage companies founded by founders that have made it and with a very substantial valuation. So that's another thought. One more thing, again, everyone noted, yes, most of the Israeli high tech is ultimately code. Most of it would be cyber and AI, but there's also some new fields. For example, I'm sure many people talked about the defense. If you look at the defense, a defense startup 5 years ago was unheard of. I mean, clearly, why? Because of long sales cycle and regulation, and you'll need so much time and money. We see a lot of defense companies. There's investors that invest solely in defense. The business model is interesting. Time will tell, right? No one knows if this is really, in terms of return on money, would be effective. You also see other verticals, quantum computing, digital health. And by the way, you see also, in some cases, people doing really crazy stuff. As you all know, there's a lot of talent emerging from the army, the universities, and so forth. So overall, right now, I think the market is doing relatively well. And we want to stay optimistic. So of course, there's challenges for the future, which would need to be addressed. The effect of the Israeli high tech on the economics and the defense and is of course very substantial, but we're trying to keep positive. So.
So we need to wrap up soon. I mean, it goes very, very quickly. One last question, maybe, before we close. And I'm trying to relate to the previous sessions when we discussed it before the panel. So what I hear from you is we still keep the moat of the ecosystem over other ecosystems that we compete with. What is your, first of all, what is your advice to startups navigating this environment? I mean, what is the opportunity here? We talked about quality of the startups, right? We've heard that in previous sessions. And then again, there's the trends and the macro. What is your advice to startups navigating this complex environment? And yeah, take it from there.
Okay, so it was difficult for it to hear. I apologize, but what is my recommendation for?
Yeah, what is the recommendation? I mean, okay,
So
now we can hear.
again, having met really hundreds of teams, my recommendation is as follows. First of all, it's a long journey. People that have dreams of a very quick success, probably not going to go. Another recommendation is absolutely get the best founders that you can. Statistically speaking, if you're alone, as talented as you may be, you're not going to do as well. You need people that complement your qualities. So that's extremely important. Third is, of course, raising money is important. Valuation is not the most important thing. Actually, in some cases, valuation have killed companies. We didn't talk about that as well, but so get the best investors that you can.
No.
And
So you see investor over valuation, right? That's what you're saying. Basically.
Absolutely. So, investor above valuation, having the right advisors, and not trying to maximize the capital. We tell founders, early
Leave some money on the table.
If Elon Musk would come to your company and would want to be your advisor, how much options would you give Elon Musk? Now, some say 1%, 2%. The right answer is probably, financially speaking, 99%. And so, so there's a lot of, but it's a long journey, and people need to understand.
You're doing the work here for Boaz and Ori in the negotiation.
Yeah, with time over, so we'll do it in a sentence. I think we should, obviously we're not globally and in Israel, not regular times. They're very volatile, and things can happen every day. So just prepare for that. Prepare for, hope for the best, prepare for the worst. I guess that's the best advice I can give.
So I'm going to change my hat from an investor to a founder. We founded our company 6 years ago. It was a long journey to make it profitable. Then we took it public. And in the first few years, it was a tough experience. So my advice is first, prepare your family. You have to prepare yourself, so it's natural, but prepare your family to the roller coaster that you're going to take them with you, and make sure that you're ready to it and that they are ready to it, because if it will not be on par, then it's going to pop up at some stage. And then I think the most important is the two things, which are three things. First, partners to the journey. When you're alone, it's so much difficult, and the decision you're making might be affected by your mood, by fear, by things which are less rational. When other people are with you, then it tends to be more rational. Then employees is the number one asset from day one, and you have to keep it like it and keep the company's DNA as you want it to be, and make sure, loan the grass in order to keep it as you started it with. And then pick the best investors. Because when you're in the beginning and it's the honeymoon and everybody feels great and everything is going as planned, then it's fine. But there will be some tough times, and you have to make sure that that at least most of the investors will be with you, will be supportive, and you might need more money than planned. So that's asset number 3.
Okay, thank you very much for that. Before we close, yes or no question. I have my own view. Do you think that we can double the number of companies, of new established, new formed startups soon?
It's a yes or no, so it's complicated. Yeah. But the answer is no, I don't think it's a good advice to double right now the number of companies, because there's also limited talent and quality. One sentence, maybe. 10 years ago, we used to have more than 1,000 new startups every year. The number is significantly lower, but the quality is much better. So there's a compromise. If you look at AI companies, you need to take talent. There's not enough people, so apologies. It's
a trade-off, yeah.
So no, for now.
Okay. Ori.
I agree with the no. Even if you will double or triple it, then the natural selection will take care of the number, and only the good companies will survive. So it's better to start with fewer companies and focus the resources on the better ones. No. It's better for the ecosystem.
Boaz?
So it won't be on the same opinion. I can say yes, but again, I think it's a matter of, as I said, I think it's a matter of quality, not quantity. I think it's good to have more companies. If you don't have, in the pre-seed seed, you have less companies. Obviously, the big number rules not going to work. But at the end of the day, obviously, it's a quality, not a quantity. I prefer to have 100 good startups here versus 300 which are not great.
Okay. All right. Thank you so much.